The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
Okay, wow. We've got an incredibly busy week ahead in the hotel industry news cycle. Lots happening.
Yeah, it feels like it.
Our sources this week, they're really heavy on brand scaling, strategic capital deployment, and some critical tech decisions facing industry leaders like you. So our mission really is to filter this volume of information into actionable insights, hopefully in just the next few minutes.
Exactly. And this isn't just reading our press releases, right? We're trying to analyze the strategic intent behind the numbers.
Right.
We'll be looking at how these global operators are signaling confidence, especially in those high-margin segments, and importantly, what that means for your future competitive positioning, particularly, I think, in the ever-evolving APAC market.
Good point. Okay, let's start with, sheer scale, Hilton. They've hit an unprecedented milestone, 9,000 hotels worldwide.
Incredible number. It's phenomenal growth. That averages out, believe it or not, to nearly 3 openings per day over the past year.
Wow.
So when you see that kind of, raw expansion, the immediate question is, where is that focus going now?
Yeah, and it's not just the 9,000 number that's compelling, though it is impressive. It's the over 3,600 properties currently in development. That's huge. And while the milestone opening was the Signia by Hilton La Cantera Resort and Spa in Texas, the, let's say, strategic commitment, it seems squarely on luxury and lifestyle.
Okay.
They now operate over 1,000 properties in this high-end category, and they signed 200 new ones in 2025 alone. So that's real momentum.
200 new signings just in luxury and lifestyle.
That's right. And if we connect this to the broader picture, they're also celebrating 1,000 properties trading now in the APAC region.
Right, you mentioned APAC.
Yeah, and they're prioritizing expansion into key growth territories like India, Africa, and Saudi Arabia. So this looks like very targeted capital deployment, not just sort of blanket growth.
That strong signal toward APAC luxury is, it's undeniable then. And this is further cemented, I think, by the announcement of the Waldorf Astoria Residence Tokyo Nihonbashi.
Ah, yes, the residences.
This isn't merely another luxury hotel opening. This marks the debut of Waldorf Astoria branded residences in Asia Pacific, set within a new Mitsui Fudosan skyscraper opening autumn 2027.
And that move into branded residences, it shows a real belief, doesn't it? A belief that there's robust, long-term wealth out there seeking stability and, high-end services tied to a globally recognized brand, especially in major hubs like Tokyo.
Absolutely. Okay, shifting focus slightly, but staying with that APAC expansion theme, Radisson is making a tactical move into the Philippines.
They are, and they're using their upper upscale Radisson Individuals premier brand, which signifies confidence in maybe a slightly lower cost of entry than ultra luxury, but they're still targeting a high-yield leisure market.
So upper upscale is the target there.
Seems like it. Specifically, they've signed Lime Resort Bohol, that's 138 keys on Panglao Island, scheduled for late 2025. It suggests they see that upper upscale segment as maybe the sweet spot for rapid market penetration in key tourist destinations like Bohol.
Makes sense. All right, moving into specific regional benchmarks now. In APAC, Singapore just saw the debut of the Laurus, a luxury collection resort. It's opening at Resorts World Sentosa.
The first luxury collection in Singapore, right?
That's right, Singapore's first, featuring 183 suites.
And what stands out there, I think, is the holistic approach they seem to be taking. They've blended the colonial and tropical design influences, which sounds lovely, but the operational focus is really on the future.
Meaning sustainability.
Exactly. Sustainability is integrated right through. Smart energy management, reusable amenities, eco-conscious materials. It's all there. This is becoming, table stakes for new luxury builds globally, especially in competitive image-conscious markets like Singapore.
You have to have it now. And that focus on the modern, efficient traveler, it continues in Japan with the launch of Caption by Hyatt Kobutocho Tokyo.
Ah, the Caption brand.
This is the brand's first in Tokyo, strategically positioned near major transport and business hubs, offering 195 rooms. And it seems really built for seamless travel.
How so?
Well, self-activated check-in, in-room streaming like you'd expect, and this central social hub called Talk Shop. It's designed to host everything from craft burgers to local cultural workshops and even live music.
Interesting. And when we connect that high-tech, flexible approach of Caption by Hyatt to the needs of, say, the long-stay traveler, we see a clear strategic parallel emerging.
How do you mean?
Well, Pan Pacific Hotels Group PPHG, they're executing what they call their version 2.0 strategy, and it heavily emphasizes the extended stay segment. They just launched PARKROYAL Serviced Suites Hanoi, their third property in Vietnam, and it specifically caters to long-term guests. You get kitchenettes, smart in-room tech, overlooking Westlake. That flexibility and residential comfort, those are critical differentiators in their version 2.0.
So different brands targeting different needs, but flexibility seems key.
It really does.
And on the innovation front, sticking with APAC, Hilton Garden in Bali, Nusa Dua, following its refurbishment, has opened its 159 rooms. And here's a surprising specific detail.
Oh.
This property introduced Hilton's first dedicated kids club in Asia Pacific, featuring jungle-themed play areas. It seems like a small detail maybe, but feels like a big tactical move to capture that emerging family market.
Oh, absolutely. That investment in supervised, high-quality children's activities, it directly aligns with the trend reports we're actually about to discuss.
Oh, okay.
Particularly around multi-generational and skip-generation travel. It signals that operators are targeting not just general leisure guests, but specific types of family travelers. And those are key to long-term occupancy,
Got it. Okay, segment 3. Strategic investments, rebranding, and development. We're seeing massive capital flows into revitalization and new concepts. Sydney provides, a prime contrast here. On one hand, you have this huge $1 billion mixed-use lifestyle destination approved for the former Intercontinental Hotel site at 33 Cross Street, Double Bay.
$1 billion. Wow.
Yeah, led by Capital and Rebel Property Group. This project will dramatically alter the area, luxury residences, retail, offices, and a wellness center, the whole package.
Right, and it's interesting because you contrast that large-scale ground-up development with the intense focus we're also seeing on refurbishment.
Like the Adina.
Exactly. The Adina Darling Harbour closed its 114 rooms for a multi-million-dollar redesign by Batesmart, set to reopen mid-2026. This really emphasizes that strategic repositioning of existing assets is just as crucial as new builds. And what I found compelling, actually, was the specific detail that they donated all the pre-loved furniture to the charity Relove. So integrating social responsibility directly into the refurbishment process, which is a nice touch.
That is a nice touch.
Yeah.
Okay, turning to brand strategy now. ALH Hotels, that's their massive portfolio, tied to Australian Leisure and Hospitality Group. They just streamlined their offering.
How so?
By launching Nightlier Collective. It unites over 90 properties.
Yeah.
And this creates two distinct experiences. Nightlier for sort of elevated mid-scale stays, and nightcap hotels for convenient, affordable pub-style stays.
Ah, clarifying the offer.
Exactly. This simplification makes their portfolio much easier for the traveler to navigate, presumably.
Makes sense. And further south, the commitment to holistic luxury continues. Como Hotels and Resorts was appointed for a major luxury hotel and residential development on Melbourne St Kilda Road.
The Carter Building.
That's the one. The Carter Building, opening in 2028. Featuring 102 rooms and 54 residences. This project really reinforces SOMO's signature focus on holistic wellness and high service levels, positioning it as a marquee destination on the East Coast.
Okay. And finally for this segment, we saw Choice Hotels Asia Pacific adding the George Hotel Launceston to its Ascend collection down in Tasmania.
A boutique edition.
Yeah, a 38-room boutique property housed in an 1847 colonial heritage building. And they've successfully blended that rich history with modern sustainability.
How did they manage that?
Using energy-efficient systems, solar technology, it demonstrates that even heritage properties can lead in eco-conscious design.
That's great to see. Blending old and new effectively.
All right, segment 4. Industry trends and recognition. Let's talk about traveler motivations. Hilton's 2026 Trends Report introduced this concept of the whycation.
The whycation, right.
Yeah, a traveler prioritizing purpose, calm, connection.
Yeah.
Over simply, chasing a destination. This sounds wonderful, but how does this rather abstract concept actually impact operational planning for hotels?
Well, it raises immediate implications, doesn't it, for property design, for service protocols. The report specifies that travelers are integrating their routines, their pets, even their hobbies directly into their trips now.
Pets and hobbies.
Yeah, and we're seeing major increases in child-led trips, multi-generational trips, and that specific skip generation trip.
Skip generation.
Where grandparents take the grandkids, but without the parents. So properties need design spaces for hobbies. They need pet amenities, flexible room layouts to accommodate these specific family dynamics.
Okay, so real practical needs arising from that trend.
Absolutely. And furthermore, for the U.S. domestic market specifically, the report projects a strong return to the road trip, which makes on-property amenities like high-quality pool access and robust dining options really critical booking drivers again.
Interesting. It's a fascinating counterpoint, though, to the purely pragmatic economic boost provided by, say, live events. Accor gave us a really sharp example of this.
The NRL Grand Final.
Exactly. They report over 98% occupancy across their 51 Sydney CBD and Sydney West hotels during the NRL Grand Final weekend. Just packed.
Wow, 98% across 51 hotels.
Yeah. That kind of immediate guaranteed demand driven by live sport provides such a stark contrast to the, slow burn, purpose-driven Cation market.
It does, but both are critical for balancing the occupancy ledger, right?
Absolutely.
It reminds us that while we have to plan for these long-term behavioral shifts, maximizing that short-term event demand, still essential for cash flow.
Very true. Before we move to tech, just a rapid look at recognition this week. Some big awards. The JW Marriott Phu Quoc Emerald Bay Resort and Spa was named #5 World Resort in Asia by Condé Nast Traveler Reader's Choice Awards 2025.
A huge honor. Also receiving honors was the Carlisle Hotel in Brisbane, which secured 1 key in the inaugural Michelin Global Key Award ceremony. That's a big deal for them.
Definitely. And the Langham, Melbourne, also recognized in the Condé Nast Traveler Reader's Choice Awards 2025 as a top hotel in Australia and New Zealand. So congrats to all of them.
Well-deserved, sounds like.
All right, segment 5, tech and talent. Now for the tech integration challenge, we all know AI in hospitality is promising, right? But the industry consensus seems to be that it remains, well, largely overhyped in terms of immediate, fully integrated solutions.
Yeah, there's a lot of buzz, not always a lot of bite yet.
So hotels are facing this choice. Do you wait for those potentially flawless systems down the road, or do you implement incremental wins now, even if they're not perfect?
Look, strategically, the consensus really favors implementing now, capturing those incremental wins. The practical implementation areas right now are focused mainly on internal efficiency and cost saving.
Like what, specifically?
Things like predictive maintenance, automated cleaning schedules, procurement automation, dynamic pricing models, and those energy-saving guest room management systems. Stuff that works behind the scenes mostly.
But waiting for fully reliable, integrated systems that minimizes risk, right? And potential customer friction. Are we actually seeing evidence that those incremental early wins, which, let's face it, might require complex integration, genuinely justify the initial user headache and the training costs for staff?
That's the crucial tension, isn't it? But the long-term advantage isn't just the cost saving, it's the reallocation of human capital. That's the key.
Reallocation.
Yeah. By using robotic process automation, RPA, and other incremental automation tools to handle those repetitive back office and maintenance tasks, you free up your human teams. You let them focus on strategic and experiential enhancements.
Oh, okay.
And that's where you drive long-term performance and high margins by letting your people deliver personalized experiences, not process invoices or schedule cleaning bots. It's really an investment in human productivity, not just tech novelty.
That makes sense. Investing in people through tech. And that focus on experience, of course, requires the right leadership in place. So let's run through just a few key strategic personnel updates we saw this week in our Stars in Motion segment.
Okay.
Michael Gibson is the new Hotel General Manager at TFE Hotels. Peter Slater is head chef at ALH Hotels.
Important role. Ken Chang is the new Director of Human Resources at Patina Hotels and Resorts. Osama Mustafa moves to Tropical Hotels and Resorts as Hotel General Manager.
And we also welcome Scott Eager as the VP of Operations at 1834 Hotels. That sounds like a critical role for maintaining operational excellence across a portfolio.
Definitely. Carl Henry is the new Resort Manager at RACV Cape Schanck Resort. Stefan Rohr joins JATI as General Manager.
And congratulations are in order for Isabel Passicott, who has been promoted to Multi-Property Director of Human Resources.
Great move for her. And Conrad Buren joins Pier 1 Sydney Harbour Marriott Autograph Collection as Director of Finance. Finally, Neil Cowan is the new General Manager at Carlton Hotel Singapore. Lots of movement.
Lots of key roles filling up.
Yeah. And, if we look across all the news this week, from that aggressive luxury expansion, especially into branded residences, to the tactical focus on long-stay solutions like PPHG's version 2.0 and this push for targeted, practical AI adoption, it shows the industry is making highly calculated strategic bets right now.
Feels very intentional.
It does. The focus is clearly on tailoring experiences for specific guest needs and, at the same time, securing that back-end efficiency, doing both simultaneously.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week.